So we have liquidity in general up and to the right. If we take a look at the liquidity chart, our projection to the bottom of the screen, we have up and to the right here, liquidity is still going. We're only really seeing a peak here in September. We have way more shorts than we have longs. We have a history of the shorts getting liquidated more and more. The price is bumping up against moving up higher, and we're inside of a low volume summer period where chances are we're not going to get a bunch of bad news that's going to exacerbate markets. Those things usually happen 4 times during the year: September, March, January, and June.
But if Bitcoin ever goes to a Coldplay concert, that might be the end of it.
Imagine if we hit that, we hit 119 on this level over here on Monday, and we head down lower over here, 113. What does that mean? That means the Monday move was down. And the Monday move is down. That means the rest of the week should be up. The price of Bitcoin is basically asking, the chart is sort of asking, hey, bulls, bears, what are we doing here? What are we doing here?
Okay.
Because the ground didn't open up. We've been pretty much sideways since the 11th, right? We've been sideways basically this entire time, flat. We moved up, we moved down, we moved up, we moved down, and now we're getting flatter and flatter and flatter. In fact, if we put on our trend lines back on the chart, what we're seeing here is a pennant. So we have a move up, and then now we have this pennant. Okay? A pennant, when you have a thing like this, if it were straight like this, a right angle this way, that's more committal. If it was a right angle this way, it's more committal. But when we have it this way, that means it can go up or down. It means the price action is in indecision. So when I take a look at the trade that's going to come up, the level that's going to come up next week, that's usually the first thing I look at to see, hey, what will be the bias come 10 p.m. tonight? Will the price bias lower or higher? And it's always about how near that weekly level is, which is going to be the next level that's closest by. And when we take a look over here, we see that the price is going to be, the level is going to be right here around 118.8. We don't know the final price until 10 p.m. tonight, between 8 and 10 p.m. tonight, but it'll be at this level, which means we're pretty close to it, and we'd be coming up from the bottom. What did I say before? If you come up from the bottom of a level, short it. If you come from above, long it. So it all depends. The price sometimes gets squirrely, and right before 8 o'clock, the price can shoot up over here and then come down to that level and bounce and move its way forward, or it can continue underneath here, and all kinds of crazy things can happen. But the 118.8 level is a level right now that we're looking at, and we are below it. So we have to assume that we're headed lower. And if we're headed lower, where we head to? We'll head to these two levels here that are, it's no coincidence that they're coincided. There's no coincidence that this blue daily level and the red one are literally on top of each other. Mm-hmm. That's how strong that level is. So the likelihood is that we move down to over here.
What red one are you talking about?
Yeah, the likelihood is that we fall from where we are right now. Or sorry, not the likelihood. I don't want to say that. There's a possibility, a 50-50 chance that we head down to 113, 113.2. Okay? Now, would I say go ahead and take that bet? No. I wouldn't take the bet for the short. I would say if we get to 113.2, go long. Because the bias is long right now for Bitcoin.
Right.
It's hard to short a bullish trend. Anything can happen in order to get it back up. Another act can pass for crypto. Some news can happen. Whatever. A coin could drop. You don't know what's going to happen. So if you're in a bullish trend, I don't recommend that you short, especially at such a bullish time where, let's point out some of the bullish things that are happening right now. Because I pointed out bearish price action in that we're below the weekly level, and that the only level that's nearby are the ones at 113.2, but it's a bunch of bullish things. Number one, I did mention this pennant. However, we have this level over here in the middle of the price that started from way back yonder. So we have this level over here, and what we're seeing right now is that the price is pushing up against it once, twice, 3 times, 4 times, and now 5 times. If it goes back up there, it's trying to stay above that level, right? So that means it's this upward pressure that's happening, and every time it knocks at that level, the chances are that that thing will now break. And when it does break, the move is usually proportional to how much we were knocking against it. Right? So notice this move up, which was precipitous, and then basically straight sideways. Just boom, 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 let me out of here. So when the price actually moves up again, we can get a massive step change that launches us to 150. All right? Then you go, okay, Tom. I'm sorry. Okay, Sacred Prophet. Where would the tender come from? Where will the orders come from? Well, if we take a look at our liquidation chart on CoinGlass, we can see that if we take a look at Bitcoin over the last 30 days on Binance, OKX, and Bybit, do you remember last week, Peter, how much we were at here, the short? The week before, I think we were at 2.5 billion short versus like 400 million long. And then last week, I think we were at 4 billion short versus 400 million long or something like that. Do you know what we're at now?
Nope.
We're at 7 billion short. 7 billion short versus 750 million long. That means the shorts are not coming back in. Ooh, boy, these guys want to get wrecked. Okay, these shorts are coming back in. So that means whenever you have more shorts than longs, the likelihood, the market always wants to cause the most amount of pain to the most number of people. She's a cruel mistress. Whenever anyone's on one side of the boat, the market wants to move to the other side. This is why one of the reasons why you have this oscillation within the price. You ever wonder why prices keep going up and down and up and down and up and down, no matter what chart you look at? It just ebbs and flows in the sine curve. It's because there's always push and pull in order to cause the most amount of pain to the most number of people. Ooh. And so just like we saw last time, when we had this step change up over here from 109 up to 123, just like we had it before, the step change from 74 up to 115. These levels up, these jumps up are from liquidations, folks. From liquidations. Look, let's head over to CoinGlass again. Let's go to the liquidation history. This is going to be a little bit hard for you to see, but let me show it to you anyway. We'll just see it on Bitcoin, and we only have the information from basically 2021. But let's take a look at the price. So what we're seeing over here, the green bars there are whenever long positions, leverage long positions are liquidated, which means the market is forcing a sell-off of all that leverage position. So if someone got $10 million long Bitcoin and get liquidated, the system automatically sells 10 million. Right? So you get that pressure. It doesn't slowly go and we'll ease out and we'll DC it. No. It just immediately sells it all. And the bigger the position or the sum of positions, the bigger the price shock on the chart. Same thing with the red bars, which are when the shorts get liquidated, the price moves up. So over here, I'm going to try to show you this over here, Peter, but over here, you see this red bar?
Yeah.
And how it coincided with this move up?
Yeah.
And then you have stuff like over here, this green bar coincided with this move down. I'm just trying to point you out to the ones where there's no like wiggles. It goes straight down.
Mm-hmm.
If we head back out. So then we had a period where this is a highly volatile period of shorts and longs, right? So it gets and that coincides with this volatility within the price. They get all liquidated out all the way down till we get to the bottom of the market over here. And what do we see? Super calm, right? The amount of volatility here is not high. Then we're getting back over here and we're seeing stuff like over here, this red bar coincides with this step change up. This green bar with this step change down, right? This red with this up, and so on and so forth. So if we take a look at what's going on over here now, we're seeing that, you'll see that this level over here, this red level over here, let me zoom in a little bit more. This level over here is happening with this step change. This one over here, this step change, and so on and so forth. Okay?
Right.
So when these liquidations, this is why the liquidations matter so much, because it'll cause a step change in the price. Right? And we're not even talking about a bunch of longs coming in afterwards. We're just talking about the shorts get burnt. And then they don't want to enter into another short until things calm down and go sideways, and then they'll add to their shorts. So you see over here, the red bars are getting more and more. Here they're larger, 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 and larger still. This is the shorts keep getting wrecked and wrecked and wrecked more and more and more and more and more. So if now we have even more shorts coming, we can expect another step change up. Does that bring us from where we are now to 140 and beyond, 150? Who knows? But the bigger that short position is, the more significant it'll be. So since we have 10 times more shorts than we have longs, the bias is towards the long side, that those shorts will be liquidated out. Does that make sense?
Yeah.
Yeah.
All right. So that's interesting. And how do you get that map again? What's that website?
This is on this is CoinGlass, right? Yeah, CoinGlass.com.
And you're looking at the liquidation map on CoinGlass.com.
Yeah. Very, very, very useful. So we have liquidity in general up and to the right. If we take a look at the liquidity chart, our projection to the bottom of the screen, we have up and to the right here, liquidity is still going. We're only really seeing a peak here in September. We have way more shorts than we have longs. We have a history of the shorts getting liquidated more and more. The price is bumping up against moving up higher. And we're inside of a low volume summer period where chances are we're not going to get a bunch of bad news that's going to exacerbate markets. Those things usually happen 4 times during the year: September, March, January, and June.
But if Bitcoin ever goes to a Coldplay concert, that might be the end of it.
So just one thing I want to point out, you'll remember that I'll often say when the price is moving up, I hope we move to the weekly level.
Right.
Because then it's healthier. We clear out a bunch of stuff. A bunch of the shorts. We can get the longs in, and we can move forward. And when we don't do that, we get this sort of plateauing until we can come down. So, for example, over here, we saw that over. Let me just make it a little bit clearer. All right. So we have our weekly levels. All right, take a look at the weekly levels over here.
Okay, wait, hang on. What are we seeing here? What's this indicator?
This is the levels indicator, and I've removed everything so that we're just seeing the weekly levels.
And
so
these
the red
levels
bars
are these are VWAPs?
Yes, exactly. So over here, what we're seeing is that a healthy move is that the price of Bitcoin moved up, went sideways, and then came down to the weekly level, grabbed some orders, and then headed back up. Right? But let's see here. This level over here, this is so painful. This level over here, this weekly level, when we moved up, we tried to get down to it, but we didn't. Look familiar? We didn't get down to the level.
Yep.
So what happens is the price moves sideways. It tries to move up, gets pulled back down, trying to get to the level. Didn't get there, moves back up, moves sideways, and we just don't get to the higher highs until we get to that level, grab the orders, and now we can launch. It's no wonder that we launched literally after hitting that 70, this was the 99, I think, level, and moved up. It's no wonder. So when we don't, because we haven't hit this level yet, if we hit this level now-ish, super bullish, guys. Super, super bullish.
Start selling.
No, start buying.
No, you start selling now to get it go down. Start dropping.
Sure, yeah. That would be super bullish. If we don't, then chances are we peak out at some place, whatever. We move sideways for a while, and we're coming back to 113 to sit at some point.
Don't like that.
Well, that if you're thinking about the short-term bullish move, can we get to 150 before the end of the month in order to make oodles of money on poly market? Well, that's sort of what we want. Right. Now, what we'd expect is a pop off. We get to 150, simmer around there for a while, and then move down. And maybe that's the top for the cycle, even. Who knows? And then we get down to 113. But we want a freaking wick at some point to come down to 113 to grab this level so that we can move up. Or either we clear it with a price, or
moving average.
We want to clear it with a wave. Mm-hmm. We want the wave over here. Let's move through our daily. So that's not likely to happen. So this wave over here, this yearly wave, you guys remember I've talked about this before when we're down at 74, that once this crosses over a level, it mitigates that level. In fact, the more waves cross above one of these levels, the less likely the price gets down there. You have to think of it in terms of buoyancy. You have to be denser and denser and more of a volatile event, heaviness of selling or some sort of event shock in order to get down there. And so now if we take a look over here, the level of 113, we don't really have any waves come to cross above it. We have the weekly wave that crossed above it, which is okay, but that doesn't prevent it over here. Just because the weekly wave moved around over this level doesn't mean we didn't come back to it afterwards. So we would want to see even this seasonal level to come up drastically and cover it. So if, let's say, the price keeps skyrocketing and keeps moving or whatever, you're like, Tom, you're wrong. We didn't actually move to 113. Well, that means because eventually one of those wave levels are going to cross that price. And if it crosses the price, then we're done. We're only going to revisit it when we're going to head down at the end of the cycle. So it could still be bullish that we're not hitting that level, but it would be hella bullish if we hit 113. That would be like the ideal.
All right.
So what are we looking for the week coming up?
Yeah.
So far, it'll be 118.9, 119. That'll be the weekly level. If we hit it from the bottom, chances are we're going to bounce and head to 113. If we get to 113, let's hope that we get there as soon as possible. Imagine if we hit that, we hit 119 on this level over here on Monday, and we head down lower over here, 113. What does that mean? That means the Monday move was down. And the Monday move is down. That means the rest of the week should be up, which adds that a whole rocket up. If Monday is an up move, then chances are, and it doesn't like skyrocket, chances are we're headed down to 113. So we'll see what happens Monday. We want to clear one. I don't know. It's going to be one way or another. One thing's for sure, we got 2 weeks, a little bit less than 2 weeks for that poly market bet to pay off. And I would love to just get 113 cleared and get that out of my head so we can move up. But if we don't, let's hold on with gritted teeth. I should also mention that if you are doing the 50x leverage trades and you're added in at the perfect entries, you're not even worried. You're up. You're still up 400%, 500% on those positions because we're not gambling around up here. We're getting perfect entries at our weekly levels. So that means the last time that we seriously bought was over here at 105 and then previously at 99. All right. So when you're like, hey, Tom, can I get in now? Sure, but this is why I'm talking about getting at the perfect levels. You tell me that you wouldn't feel more comfortable if your entry price was over here and not over here, the breakout, because you just needed to wait for the breakout to happen. You doofus. You dumb. No, perfect trades. That's how you become invincible.
Head over to sacredprofit.com to get those indicators. Once again, they are free, offered at zero cost. All you have to do is sign up as an affiliate for BitGet or Blowfin. More exchanges to come.